Hello, investors, traders, and fans of the cryptocurrency world. Welcome to our channel where we bring you the latest news, in-depth analysis, and real projections about the digital currency universe. Today, we're diving into XRP after months of anticipation and a complex regulatory landscape. The first XRP ETF in the United States is about to become a reality. The asset manager REC Shares, in partnership with Osprey Funds, has officially announced the launch of the REC Osprey XRP ETF, which will trade under the ticker XRPR and is expected to begin operations this week. This milestone represents not only a victory for long-term XRP investors, but also an unprecedented precedent in the regulated crypto asset market in the US. What stands out, however, is not just the approval itself, but the innovative regulatory strategy used by the fund to navigate barriers imposed by the SEC, paving the way for other cryptocurrency funds facing similar obstacles. The regulatory environment for cryptocurrency ETFs in the United States has historically been challenging. There are two main legal frameworks governing the creation of such funds: the Securities Act of 1933 and the Investment Company Act of 1940. Traditionally, most companies opt for the 1933 framework, the same one used to approve Bitcoin, like BlackRock's and Ethereum ETFs. This route requires that the underlying asset be deemed resistant to market manipulation with sufficient liquidity and clear transparency criteria the SEC has used as justification to reject applications related to other cryptocurrencies, including XRP itself. In XRP's specific case, the ongoing legal battle between Ripple and the SEC over whether the token qualifies as a security has added even more uncertainty to the process, making entry through this traditional path virtually unfeasible. Faced with this impasse, REC Shares and Osprey Funds decided to take an alternative route: the Investment Company Act of 1940. This legislation, created 7 years after the 1933 Act as part of the economic recovery effort following the Great Depression, was designed to regulate collective investment funds, focusing less on the nature of the underlying asset and more on responsible fund management, instead of requiring direct proof that the XRP market is immune to manipulation. The 1940 Act prioritizes strict compliance requirements such as secure custody, asset diversification, transparent disclosures, and investor protection. This allowed the fund managers to build a product that, while exposing its shareholders to XRP, operates within a more flexible and already established regulatory environment in the American financial system. The strategy adopted by REC and Osprey is not entirely new. It was inspired by the earlier success of their Solana Soul Staking ETF, launched by the same firms in June 2024. On that occasion, they also utilized the 1940 Act to make viable a product that would otherwise have faced significant approval challenges. According to James Seifert, analyst at Bloomberg Intelligence, This approach uses creative workarounds compared to other traditional proposals. He emphasizes that instead of trying to force the SEC to recognize XRP as an unregulated asset, the fund shifted its focus. It's not the asset being regulated, but rather the structure of the fund holding it. This shift in perspective is revolutionary, demonstrating that innovation within the existing legal system is possible, without relying directly on explicit SEC approval of the Token S classification. According to the new ETF's prospectus, the fund will hold the majority of its assets in physical XRP, securely custodied, thus ensuring direct exposure to the cryptocurrency's price. However, to comply with the obligations of the 1940 Acta Speciale rules on diversification and risk mitigation at least 40% of the assets will be allocated to other ETFs related to the XRP ecosystem. This hybrid structure reduces excessive concentration in a single asset and aligns the fund with regulatory requirements, while maintaining focus on the growth and adoption of XRP. For institutional and retail investors, this means regulated, secure, and auditable access to XRPs, something that until recently seemed impossible given the SEC's conservative stance. The arrival of $XRPR on the market signals a new phase for the cryptocurrency market in the United States. It shows that even in a hostile regulatory environment, intelligent and sustainable solutions can be found to bring innovation into the mainstream financial world. Furthermore, it opens doors for other cryptocurrencies facing similar barriers, such as Cardano, ADA Polkadot, or Avalanche AVT. The success of this ETF could inspire a wave of new funds using the 1940 Act as a foundation, accelerating the integration between Wall Street and Web3. For Ripple, it's an indirect but significant victory. Every step toward regulatory legitimacy for XRP strengthens its position as a strategic asset in the future of digital finance. The era of cryptocurrency ETFs may be just beginning, and it starts with a brilliant workaround of bureaucracy.